So we're talking this week about a company called Reckitt Benckiser, a new addition to the funds. A great business, already a great business, posting very high returns on equity. It's high quality, it's high growth, but we're really interested in the transition that we think they can make, from a more standard traditional HPC company into a health and a hygiene company. Something that's underway, but we've looked recently at the Sustainable Development Goals, which is where the world has set out where we need to be by 2030 to deliver sustainable development. We believe it gives tailwinds to companies like this, particularly Sustainable Development Goal 3, health and wellness, and Sustainable Development Goal 6, and particularly 6.2, which is about sanitation. This is a company materially exposed to the provision of essential medicines and the provision of surface cleaners, things that might not seem particularly attractive to us at first glance. When you look at it, these are vital in delivering a reduction in communicable diseases, hand washing, toilet facilities. It's all come with sanitation and with hygiene. So we've looked at what the goals might mean for national programs, for education programs, and how that might drive over long term, over a much longer term than you might look at quarterly numbers, but out to 2019, and we see material uplifts. We think that the hygiene part of this business could be 43%, the health could be up to 40%, and the home division, the more traditional, could be really coming down, sort of 12% by then, and maybe sub 10% when we look out to 2025, if indeed the company doesn't do something about it in the meantime. So, very interesting business already, materially exposed to these themes that we look for. The Sustainable Development Goals, a real health and wellness path that we need to get on, and not just in the developing world, but obviously this company is exposed to emerging markets. When we change our forecast growth rates, we believe they can achieve them. We get a value that is around 10% more than that implied by consensus, and on that basis we've added it to the portfolios.